Hey guys, RC Peck here, and whenever the market goes into a correction, it gives us an opportunity to really figure out if it's a correction or if it's a start of something much bigger. So I'm going to cover that today in this weekly update, and I'm going to just dig around through all the markets to really get that clear answer that, yep, this is or this was a correction and it's full steam ahead, or brace yourself, really start getting things in order because we have a much bigger thing in front of us. So stick around and I'm going to talk about exactly why it's one of those, and I'll show you. All right, I'll speak to you in a minute. Hey guys, RC Peck here with Fearless Wealth, and I want to talk about this correction we're in. The S&P's down about 5%. Top to bottom. The NASDAQ 100's down about 8 or 9%. So let's jump into and figure out what is going on. Where's the actual evidence in the markets that A, this is a correction and it's over? That's one. Or B, it's a correction and it's just getting going. We got much bigger downside in front of us. So let me jump over to the price charts. Let's start with this one right here. And we have a lot to cover today. I'm going to not only cover the correction, but kind of talk about what's been going on this year to give you an idea of the thrust and the momentum. So if you look at the screen here, if you look over here at the screen, this is the tier market. So if you think of the world, you have the developed market, you have the emerging markets, and you have those little teeny tiny countries like Qatar and Saudi Arabia and Ecuador, these teeny tiny countries. Well, that's what this price chart is, and look what's going on. That's a new lifetime high of the riskiest countries on the planet going higher. So let's just think about the environment we must be in if the riskiest of the risky countries are breaking up and out. And that's what's going on here. We must be in an environment where the market's actually pretty happy about the future and it's moving higher. And it's literally showing us that right here with frontier markets moving up into the right, breaking out and leading the market higher. That's what we want. We want those risky areas, those risk-on areas to be moving higher, and that is exactly what is going on. So that's the first thing I want to share with you. The second thing I want to share with you is, let me pop over to a year to date. So this is a year to date price chart, and let me put in XLU. So XLU is a defense area of the market. So if you have to keep your money in stocks and you can't take them out, or you don't want to take them out, you look to these areas to protect you. You look to utilities or staples and even healthcare. So if things are getting worse, okay, certainly with the market this year, just look at here. This is XLU, which is utilities. It's the worst performing sector of the year. It's up about 7% for the year. Staples are up about 7%, and healthcare's up a little bit more than that. But we have the defensive parts of the market doing really bad. Now, if you look at the screen, this is where the U.S. stock market peaked. It's going through a correction now, and I believe that's just a small correction. We may almost be done with it too, which is what my really look and approach is saying. We're probably done with it. We're going to be moving higher soon after we get out of October, which we're about halfway through. So utilities, since the S&P has peaked, is down. It's not up. There's no defense going on. It's telling me is we are in a correction at best, and probably that 5 or 6% in the S&P is probably all we're going to get, because the parts of the market that people get scared into while having to stay in equities is actually performing worse. Since the S&P started that decline, utilities are the worst performing sector. Staples are the worst performing sector during that decline in the S&P. So clearly the market is saying, when you understand how to read price and understand how to look at signals, that this is just a correction. It's not a big deal. Okay, so we got that right there. Also, too, I wanted to show you copper. So let's look at copper here. So this is a weekly price chart. So each dot on here is just the weekly closing price. And it's a long range here. It's about 20 years. So this is what I want to show you. Here's copper's old high in 2011. Copper's making a run for a new lifetime high. Now, it attempted it and made it at the beginning of the year, but it got pulled back. If you look to the upper right corner of that price chart, copper tried to break above those 2011 highs, couldn't do it, came back down, and now copper's making another run. So it's right up there. I mean, literally copper is 1%, 1 or 2% off its lifetime high. Again, we're looking at a weekly. Now compare this to gold. Gold has a similar chart in that it peaked in 2011 alongside with copper. And you can see I'm highlighting the high in 2011 just like I did with copper. Unlike copper, gold is not above that top blue line. It's not above supply. It's not above resistance. It's actually just barely holding on to the bottom blue line. So gold is really struggling. I mean, really struggling. If there ever was a time for gold to move higher, if you believed in money printing, destroying the dollar, blah, 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 it would be now. That's not happening. This is why understanding how to read price charts is so darn important. Metals are going higher. I mean, this is what I really want you to understand. Metals are going higher. Metals are going higher, just not precious metals. Look at this, DBB, and let's put in CEF. CEF is silver and gold together. It's the blue line on the chart. So if you look at the screen here, and I apologize for it being so small. Let's see, can I make that bigger? Oh my God, that's way too big. Okay. Hold on a second. Okay, at least slightly bigger. So the black line is base metals, copper, zinc, things like that, stuff that's not that exciting. It's going up, and it's going up with an vengeance. Then you have silver and gold, which is the blue line-ish. They're 50-50 in that blue line. They're down for the year. So no one's moving into precious metals. This is why an investment is not a hedge, meaning if you just had 5 or 10% of your money in gold, that's not a hedge. The hedge is the strategy that has you own or not own an asset. And this is showing it right here. Well, really knowing that distinction is really important. Okay, so what do we have? Frontier markets going higher. That means risk on. That means we're probably going to end the year on a high note, okay? The defense sectors, utilities, staples, healthcare, they're literally the worst sectors in the market this year. So that's number 2. Number 3, copper is attempting again. It's about 1% below its lifetime high. Its lifetime high was earlier this year. It's making another attempt. Copper is moving higher because people want to own copper. Why do people want to own copper? Because they're building things. Why are they building things? Because people want to buy those things. That's what's going on. Copper's moving higher. So this is what's happening in the market. Maybe not what you want to happen, but the market is moving higher. It's in a little correction. I'll just bring up SPY here just to show you. It's in a tinge of a correction. Not much going on here, really. That's just, and we can measure it just really quickly. That's about it's a little over a 5% correction. And that's what we're seeing. Now, here's where I'm watching, and this is what I'm watching. If small caps break out. Now, small caps, pretty interesting. They were up 140% the beginning of this year from the bottom of COVID. At the same time, the S&P was just up over 70%. So literally small caps were 100% better return, right? They were up 140% while the S&P was only up 70%. And then they just hit a wall. If you look at the screen here, they literally just stopped. Okay, so this is going to be another sign. It doesn't have to happen. Small caps do not have to go higher for the market to go higher because they haven't gone higher since March. And the market has. But when we do see small caps break up and out, which I believe we will, we're going to see potentially a really, really good end to the year from equities. Okay, so we have that. Let me just check out my notes here. The last thing I want to point out and talk about, and let me bring it up here, is ETHUSD and BTCUSD. Last thing I want to bring up is the 2 biggest cryptocurrencies on the planet. Bitcoin, which is over $1 trillion, and Ethereum, which is about a 400 plus billion dollar. They are not going anywhere. They are bigger than China. I've talked about this. I talked about it last week. Go look at last week's video if you want to know more. This is a really important thing. This is solidifying the existence and the continued existence of cryptocurrencies going forward. Now, there's about 9,000 cryptocurrencies. Think of this as kind of like .com 1.0. But guys, there's a lot of cryptocurrencies that are over $1 billion market cap. And there's a lot over a $5 billion market cap, about 25 of them over a $5 billion market cap. But on the screen here, you see Ethereum, and this is year to date. Ethereum's up about 400% year to date, and Bitcoin's up about 100%. By the way, they weren't doing that. Actually, I said year to date, but do I have that? Yeah, I do have year to date, right? That's right. There were points this year where Bitcoin was just break even. Back in July, it was at a 0% return, and now it's up 100%. It's about to test its old lifetime high. If that breaks loose, which is very likely because it already has shaken, thrown off China's "we don't want you to own any crypto," right? Because owning crypto in China is illegal. This is amazing what's going on. The second largest economy on the planet has outlawed all crypto, outlawed all mining. And crypto said, yeah, whatever, China, you don't matter. The world is bigger than you. And that's what we're seeing on the screen here. The two biggest cryptocurrencies on the planet have literally looked at China, said, yeah, whatever. We don't need you to mine us anymore. We don't even need you guys to own us anymore because we're bigger than you. That's probably one of the biggest stories this year. China is definitely one of the biggest stories this year, which let's just quickly look at what China has done in 2021 so far, because they keep attacking themselves. China itself is up about 3.5, call it 4%, let's round it. They can continue to hack away at their stock market and their entrepreneurs because their stock market is still positive for the year. It's really, really underperforming the rest of the planet. But the Chinese Communist Party can still continue to attack internet companies, tech companies, internet entrepreneurs, because as you see here, their stock market's still moving higher. Now, let me say one thing about China. Most of Chinese people's wealth is actually in real estate, is in empty buildings all over their country. It's very different in the United States and the rest of the world, in Europe, where the majority of people's money outside of their own house or property is in the stock market. So the stock market takes a secondary or tertiary chair to the real estate market in China. What China is most focused on is to grow their economy. That's what they want. They want to grow their economy, and they want to grow their economy, and then they want to grow their economy. So that's their main focus. So to wrap this all up, we are probably done with the correction. We had a 5% correction if you're looking at the S&P. If you're looking at the NASDAQ 100, it's right here on the screen. It was a little bit bigger. Let's see, 9%. Yeah, 8%. It was an 8% correction. So we won't know until we have a new lifetime high in the S&P and the Qs. And one of the tells will be small caps breaking out. But like I said at the beginning of this call, beginning of this video, is frontier markets breaking out to new lifetime highs. Let's bring it up on the screen here. Bring it up on year to date. That's what we have here. Pretty impressive. Frontier markets are up 26, 27% year to date. Pretty dang important. And it really tells us that what we're in right now is just a correction, and most likely it's probably over. Thanks, guys, for being in my world. If you like this, please. My kid made fun of me because one of the things we do, I'm a single dad, as some of you guys know, we like to sit down together, all three of us, and watch videos. And sometimes one of my kids will ask me how many subscribers I have, and I have to be like, I only have this many. And they just start laughing because the videos we watch have subscribers that are in the hundreds of thousands or millions. So if you're not a subscriber and you do like my videos, please click the subscribe, click the like. They make a difference to the algorithms. And leave a comment. Where am I right? Where am I completely wrong? What did I miss? I'm absolutely open to reading your comments. It's okay if we don't get along or if we don't agree. Leave it, because it really is important for me to understand what you're thinking, what else you're hearing. Thanks, guys, for being in my world. I appreciate it. I will see you on the next video. And if you want any more information, just look down in the description. We have a lot of good, juicy links for you. All right, thanks.